Good morning and welcome to Charting the Markets on Wednesday, the 31st of January 2024. Asian equity markets had a mixed session overnight. The Nikkei 225 continued to advance, but the Chinese equity indices declined. And we saw the yen in Japan firm up against the US dollar after the Bank of Japan meetings showed that policy normalization was getting closer and that some policymakers were now moving to favor a rate hike this year. That would be Japan's first since 2007. In China, however, manufacturing data showed a contraction for the fourth consecutive month, even though China's services growth hit a 4-month high. Chinese indices fell regardless. And looking back to the Eurozone yesterday, we saw GDP data out of the Eurozone. We saw that there was zero growth in the fourth quarter, and thereby the Eurozone narrowly avoiding a recession, as did Germany and France. And the IMF also lowered Germany's 2022 forecast with regards to growth from 0.9% to 0.5%. But despite all of that, the DAX 40 index, the German stock index, hit a new record high on Tuesday, and we'll look at that in a moment. Before we do, I'd like to mention that today we have German inflation data out at 1 p.m. and this will be followed by the US ADP employment report at 1:15 p.m. and then the US Chicago PMI data out at 2:45 p.m. and that is then followed by the EIA crude oil inventories data at 3:30 p.m. ahead of the all-important Fed decision with regards to its monetary policy later on tonight at 7 p.m. So let's have a look at the FTSE 100. We can see that the FTSE 100 has slowed down with regards to its rate of ascent after Friday's very sharp rally to the upside on luxury goods stocks rallying after LVMH saw better than expected results, and its share price rose by over 10%. And this led also to UK luxury goods stocks rallying. And you can see here we yesterday went all the way up to 7,685 on this daily financial bet, a level we retested earlier this morning before trading in this low volatility sideways trading range, now ahead of today's Fed meeting and tomorrow's Bank of England rate decision as well. So it's normal for markets to take their foot off the gas basically as they await key economic data. Now, with regards to the charts, the next technical upside target is the high going back to October of last year at 7,702, and it is basically the first line in the sand before we can then head higher towards the mid-December high at 7,725. So these two levels, 7,702 to 25, represent our next target area ahead of the September and also the December highs between 7,747 and 69. Now, if we were to see some sort of hawkish stance out of the Fed or even the Bank of England tomorrow, we may see a retracement lower with regards to this current uptrend, and that could take the FTSE 100 back down again towards this orange line here, the orange line being the 55-day simple moving average at 7,584. So that is also a possibility going forward. Now, I was talking about the DAX 40 contract, the German stock index, and we can see here that we hit a new record high yesterday on this daily financial bet above the psychological 17,000 mark, where we also briefly traded back in mid-December of last year and rose to 17,016 before also coming off in very low volatility trading ahead of this evening's Fed meeting. And don't forget that Microsoft and Alphabet yesterday beat expectations, but despite that, both of their stock prices fell as concerns about the rising cost of massive AI investments weighed on investors' minds. And that also dragged some of Asian markets lower, and also the European session earlier this morning, alongside also AMD, which dropped on its less positive outlook by around 10% or so. So if the FTSE, if the DAX 40 were to fall through yesterday's low at 16,912 on this daily financial bet, we could slip back again towards the 11th of January high at 16,842. That is a possibility in the short term as well. If we were to, however, rise above the current record high at 17,016, we could be heading towards the 17,100, 17,200 zone. Moving on to the US. The US market, the S&P 500, also hit a record high this week at 4,931 on this daily financial bet. But as you can see here, we are starting to come off overnight on those earnings out of the US, and ahead of this evening's Fed meeting where Jerome Powell is expected to leave rates unchanged, but all eyes are on the statement and the press conference after the meeting, where investors will try to glean which way the Fed leans and whether the Fed is going to talk about quantitative tightening being stopped at some stage, a framework for that being set up, and also when the first rate cut might happen this year. Now, the chances of a March cut had dropped from around 65%, according to the CME Fed Watch, at the beginning of the year to now around 45%. And we'll have to see whether that will change after this evening's Fed meeting. Now, if the S&P 500 were to fall through the low seen yesterday at 4,899, we could be slipping back again towards the 4,870 area or so. And below there, we have some more important support between the December highs and also the 11th of January high between 4,803 and 4,795. So that's a really key support area. As you can see here, I've also drawn a line through these highs with regards to those levels. And we also have the uptrend going back to October of this year, which comes in that area as well. But if we were to rise above 4,931, and don't forget, tomorrow we've got earnings out by the likes of Apple, Amazon, and also Meta Platforms, the last three of the Magnificent Seven, and that could perhaps lead to a further upside being seen, in which case we would be heading towards the psychological 5,000 mark on the S&P 500. But don't forget, there is also a risk with regards to geopolitics, as the US response to the deaths of 3 of its soldiers at an army base in Jordan hasn't as yet been seen. And US President Biden said that he had decided on action, but that he also wished to avoid a wider war in the Middle East. With regards to the US dollar, nothing much has happened in the course of this week, as the US dollar has traded sideways ahead of this evening's Fed decision. And you can see the impact of that on the British pound. You can see here the British pound against the US dollar has traded sideways for most of 2 months here. And basically, we are just trading sideways with a slightly bearish stance for the British pound against the US dollar, as the US dollar ahead of this evening's Fed meeting is slightly appreciating at the moment. And we can see here that we're heading back down again towards the orange line, the 55-day simple moving average at 126.61. Below which we can see yesterday's low at 126.40. And if that were to be fallen through, we would be heading back down again towards this key support area, going back to the 21st of December of last year, between 126.13 and 125.97. So if we were to slide further, the lower end of the sideways trading range is likely to act as support. Now, if that weren't going to be the case, we could then slip further towards 200-day simply moving average here in red at 125.63, but I would be surprised if that were to happen. Now, the flip side of that would be a rise above Tuesday's high at 127.21. If that were to happen, we could then also take out the late November high at 127.33 and head towards this key resistance area, which capped over the last month or so between 127.75 and 128.28. Another currency pair which looks interesting at the moment is the US dollar versus the Canadian dollar. And you can see here with the gold price also not doing very much and just trading sideways, the Canadian dollar has also traded sideways versus the US dollar. At the moment, we're seeing some US dollar strength, as I've just said. We're bouncing off yesterday's low, which was made at 133.96. And that, incidentally, was a 2-week low. And we seem to be heading back up again towards the orange line here and the red line, the 55-day and 200-day simple moving average between 134.62 and 78 in the short term, and have pretty good resistance coming in at the mid-January high at 135.41. So as long as we stay below there, further sideways trading is likely in play, even if short term we might see a bounce off these lows seen yesterday. Now, I mentioned the Bank of Japan and the view that analysts seem to have at the moment that there might well be a rate hike, the first since 2007 for the Bank of Japan this year. And on that expectation, the yen firmed up slightly over the last few days. But you can see here today, ahead of this evening's Fed meeting, the US dollar is gaining strength once again. And you can see that the currency pair has been trading sideways for the last week. And basically, we're between a rock and a hard place. The resistance area here is at 148 yen and 80 sen, the 19th of January high. And the support zone comes in around 146.65, the low seen last week. And at the moment, we're just trading between these two levels, support and resistance. If resistance were to be taken out, we would probably be heading back up again towards the psychological 150 mark, though. The oil price has been interesting of late as it rallied on Monday morning after we heard that a military base, a US military base in Jordan had been hit by a drone attack and killed 3 US servicemen and women. And basically we can see that the impact of that on the crude oil price was this gap higher, which we saw on Monday morning, taking us on the front month's futures contract of this Brent crude oil futures contract to 83.93, a high last traded at the end of November of last year, before we started to slip on concerns to do with the world's largest oil importer, China, and its economy, and especially its property sector, which is under threat with the Evergrande liquidation, which has been ordered by a Hong Kong court earlier this week. And we can see here that these demand concerns, the future demand concerns, are still weighing on the oil price, which is currently slipping back to the red line, the 200-day simply moving average, I should say, at 81.44. And below that, we have yesterday's low at 80.83. If that would be to be fallen through, we would have the 80.53 January 12th high in play, and probably also retest the psychological 80 mark on this chart. For the bulls to be back in control, we really need to take out not just this week's high at 83.93, but also the high going back to the end of November at 84.58. And only then could we confirm a major bullish reversal pattern from a medium-term perspective. But at the moment, we seem to be failing once again in this resistance area, as we've done back in the middle and at the end of November of last year. Now, I mentioned the gold price, and gold hasn't really done much, as I've just said. You can see here we are just trading water, not much going on. Yesterday we tried to rally to around $2,048 per troy ounce, but then came back again into our sideways trading range we've been in for the last 2 weeks, ahead of this evening's Fed decision, where we expect rates not to be cut, but where we expect the press conference to give us a better indication of when the Fed is likely to cut and when it is expected to stop its quantitative tightening. And we can see here that the gold price is currently trading above the 55-day simply moving average here in orange at around $2,030 per troy ounce, around which it has been oscillating for the last week or so, and further oscillation around that level is likely to be seen. But we should also remain above our October to January uptrend line, which currently comes in as support around the $2,020 mark as well. And last but not least, I'd also like to have a look at silver. And the silver price, as you can see here, broke through its December to January downtrend line on Monday and closed above it, which is short-term bullish. And since then, we haven't really seen much follow through to the upside yet, though. And we only rallied to $23.30 before consolidating once more ahead of this evening's Fed meeting. But if the US dollar were to slide later on, perhaps we could see another uptick in the silver price, take it towards the red line and the orange lines here, the 255-day simply moving averages, and also towards last Friday's, or the high on the 12th of January, I should say, between $23.47 and $23.60. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on X. My handle is @AxelR_IG.